Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll look at the dollar, or I should say the DXY 10-year yield, 30-year yield, precious metals, and then all the commodities that I usually follow. I'll give you my financial opinion. And again, if you guys need any help in this commodity bull market journey, definitely sign up for the Platinum membership, finding-value.com. There's still a lot of value out there to be had. Got a lot of really good potential companies out there that are putting in large bottoming patterns, very large fractals, which means we have a lot of potential upside for those patient kind of long-term investors like myself. All right, guys, let's dive in. I'll give you my opinions here. We've got the dollar here, the DXY. We've had a monster sell-off in the DXY. We can see that sell-off as a kind of rounded top, and we sold off there. Now, I think that we're due for a bounce. We've got that nice big hammer candlestick. We've talked about the candlestick formations patterns on the website. You can kind of also look left. When you look left, you can see that there's some support area in this general vicinity. I'll just put it across and move it up and down. There's support all through this general vicinity. And what we did is where there's more trading that happens in this general vicinity, the more trading that happens, the stronger that support resistance level is. And what you'll see as you go down, you're going to see this pause at certain points where those support resistance levels are, and they'll just kind of bounce up, come down, bounce up, and come down like that as it goes lower. But right now, DXY, we could see a short-term little bounce to the upside here. We've got TNX. This is the 10-year yield. Yield going lower, minus 1.66%. So that's the 10-year dropping there. I still think that we could potentially see a grind lower. Bond prices, which are inversely correlated to yields, moving higher. So this has broken its downtrend. It looks like it wants to go higher. If you're a bond investor, this is the time to be looking, is right now, or you should have been buying on this break here. TYX, which is 30-year yields. Again, yields go down, bond prices go up. They're inversely correlated. Again, I think we're going to see a grind potentially lower. This, in my opinion, the driver of this. Why are these charts showing us this? Well, we're seeing a lower producer price index. We're seeing a lower consumer price index. I think that's highly tied to the Strategic Petroleum Reserve releases and the softness in oil over the past 6 months or so, or longer. It happened in June. So almost 5-6 months, we've been grinding sideways to lower in oil prices. And the CPI and PPI are just lagged by a year or more. So, and it could be a little bit less. It depends on the numbers, but somewhere like 6 months to 24 months, somewhere in that range. And I do think that has slowed some things down. Definitely interest rates going up also slowed things down in the housing sector, which is part of the consumer price index. The TYX to TNX ratio it's basically going sideways. We've got this long, I'm not going to say super long term, but somewhat of a long-term downtrend that we were in. We've broken to the upside, and usually when this ratio goes up, what that means is that we're seeing a normalization of the curve. It's uninverting. And that's usually really good for gold, but today it was basically sideways. So I'm guessing gold, we're going to see a sideways type movement in the precious metals. Commodities, I still think look absolutely fantastic. Why do I think that? We've got a longer term big picture view here, massive move higher. We were coming into June, which is basically the Strategic Petroleum Reserve releases, needed to slow things down, and we went into a consolidation period. That's what this entire area is. It's one big consolidation period, and we broke out just recently out of the upper end of that falling wedge. So we are breaking out of the consolidation, and I think we are going to see a move higher in commodities, especially, I think, in energy. This is an energy-driven commodity index, so I do think that energy is going to do well. And there's other commodities, and right now we basically have a pennant formation, a little pennant formation going there where that's a continuation pattern to the upside. So I think that looks very good from a commodity standpoint. The CRB to S&P 500 is just bouncing around here. If we've got lower yields and lower dollar, I do think the S&P 500 will do well in the short term. How well for how long? That is the question. I'm not exactly sure. I think yields could, they're going to relax here. Nothing goes straight up in a straight line. And then I think they'll go up later on when oil, when people figure out there's a problem with oil or energy. Gold, moving up a little bit today. Again, we've got a dollar that's a little bit weaker, but it looks like it's turning around a little bit. And then we've got yields that were lower. That's usually pretty good for gold. And right now we just had a small update. Silver, we were heading down a little bit. We're at this resistance line. So it deals with the market conditions and where you are with resistance support levels. This is a longer term support resistance level, and we're right on top of it, and we've got support on top of it. So yeah, we came into a little bit of resistance here. It may get stuck for a little bit, and then we'll see if we can release from this resistance level and work our way on up. Platinum also selling off a little bit. Again, we don't have the monster sell-off days like we had in the past. This still looks very bullish to me. This is bearish. This here looks like a bearish formation. You come up, you put a wick at the top, and then you get a big fat sell-off candlestick. That is bearish. We don't want to see a fat sell-off candlestick lower. We want to see nice, small, controlled down movements where it just stair steps higher like this. That's what this is here. You just stair step higher like that. That means the buyers are in control and the sellers aren't. They're not too interested in selling. XAU to gold ratio, we're getting a little bit more selling pressure today. We're bouncing around. I do think this could head a little bit lower before heading higher, which means we could see a little bit of a pullback in precious metals in the short term. GDX, there's that bearish engulfing where I think we could see a little bit of a short term. What we want to watch here is we want to see how big the selling pressure is in this pullback if we get a little pullback here. And again, if the right market conditions show up, this can blow to the upside. There's nothing saying it can't. But statistically speaking, with a bearish engulfing, which means the opening and closing price engulfs the ones before it, that usually means we go down in the short term. SILJ, also getting that bearish engulfing. I do think we're going to get a retest move. Then we're going to go higher. So I do think in the short term, we're going to get some selling pressure. We're looking for how big the selling pressure is. I don't think it's going to be that big. I think we're going to get smaller kind of down candlesticks that come like that, and then we'll reverse and move on up. That's my guess. Crude oil up 1.15%. We're kind of just moving sideways here. I do think, kind of just looking at this overall kind of bigger picture, I do think this is kind of a continuation pattern to the upside. We'll call it like a wave 5 potentially could come or something like that. And the only thing that I'll say is a little concerning is we did break this to the downside here. This long-term trend line, we did break it to the downside, and we could bounce back and go sideways for a little longer, and for a little while longer, I should say. That's the only thing I'll say in the short term is we could bounce sideways for a little time here. Natural gas, we're still coiling up here, and I think we're about to break to the upside. We've got cold weather here in the United States, and hopefully that Freeport LNG terminal can come back online at some point. I don't think they have a specific date yet, but they just said it was delayed. Looking at XOP, yeah, you know me, rolling higher today, 2.42%, finishing quite strong too on the upside. If we back out and take a bigger picture look at this, we're kind of breaking away free from this resistance area. And the next resistance area that we really need to break is strong resistance at about $175 a share. Logarithmic wise, you can see we broke that downtrend. Everything's going great. We just have some resistance ahead of us. Looking at OIH, again, this looks fantastic, up 2%. We've broken out of the downtrend line. Everything looks good and intact. Nice, good little update today. We've got bullish engulfings down here, and we're just fighting and grinding our way higher. If crude oil follows with us, I think this will be a good tailwind. But right now, crude oil is just kind of meandering sideways. But we could get a nice move out of natural gas here if it breaks out of its little pattern that it's got. So OIH is looking fantastic, and I think we're going to get kind of above this area and start working higher. It looks really good. Looking at uranium, basically flat on the futures markets. Not much to really talk about there. The Sprott Physical Uranium Trust, looking at the dailies, I do think we're going to touch this support level, support line, trend line, and then work our way on up. Why do I think that uranium is going to go up? Why do I always say up, 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 and not down? Well, it's because of the ratios and the deficits in the markets for uranium. So that's kind of the paradigm I'm looking at all these charts with. So every trend line that hits, I look for a reversal candlestick for a move higher if it's coming downward. Uranium, it's a flat day today. We're right at that resistance level. Are we going to break this, or are we going to do another little loop here? Let's find out. We'll find out here this week. We'll see if we break and look for a big move, a big kind of pop through this thing. And it's possible that we break through this and break through this next one too over, a week or two. So again, we haven't broke through it yet. We're at that resistance line. If you're on the channel, what's important is to know where your resistance lines are. We have higher lows stepping up into this. So the force is all basically pressing against this resistance line, and we'll see if we pop right through it. If we pop through this and we pop through the next one, if we break through 78, 79, I think we're going to move big, like big time style. So we haven't broken it yet. And a lot of the companies, if you look at a lot of the individual companies, they are lining up and breaking through big consolidation patterns. So I am of the ilk, I'll say, to think that we're going to break to the upside. I'm in the bullish camp because of what I've seen in all the other charts. And there's a lot of opportunities here. And if you guys need help, let me know. Sign up to the website, the Platinum membership. Discount code discount is the code discount. And we can talk about this and all the opportunities that are out there. Looking at tan still looks fantastic to me. I like the big picture view here, and we're starting to get some separation here to the upside. I think we could see a big move in tan. It looks really good. COPX also rolling a little bit higher today. We continue to grind on up. Still looks good. And there's a lot of opportunities in the copper region, and the ETF is looking really good. Lithium down 1.21%. I mean, this chart, it's not like a pretty looking chart. I mean, this is like, I don't know. I mean, when I look at this is like kissing your sister or something. I mean, it looks good. We've broken out, but we're in this consolidation zone. It just looks weird. I mean, I guess you can break this. We've got kind of like a little pattern that looks like that. And it looks all right. It's a big, flag pattern that I just drew there, but it's okay. Some of these things, I don't like seeing these large, selling months like this, where you kind of like fight up. It's kind of hard to read where this thing wants to go. I still like lithium. The out in the future, the deficits, it all looks pretty. I understand that. REMX, another chart that I really like. We're right on that support level, bouncing off that support. Yeah, we were down today, 3.16%. But it's not a reversal this is a reversal candlestick yesterday, so we did get our down movement. And yeah, we could pull back a little bit more. I don't see any reversal candlesticks yet. It's kind of a strong finish of this day. So I do think we could see a little bit more downside in REMX, but we're bouncing above support. Everything looks good. The S&P 500, we were up, small up day, no reversal candlestick, nothing really to write too much about. And yeah, it's just an up day. Nothing much else to say there. NASDAQ was up, but momentum was coming back down. So it gapped higher, momentum's coming back down. I can't say that this looks really strong. It's just an up day with momentum coming back down. With that weaker dollar, EEM is moving on up. I think EEM looks really good here. Again, I know some people are like, well, what kind of companies can we play it with? I think we're already in those companies, guys. I mean, it's natural resource companies that are around the world. They could be fertilizer companies, they could be energy companies, whatever it is. And as the dollar weakens, the DXY, emerging markets usually wakes up and gets a nice good move to the upside. So I like emerging markets here. XHB, another one for the home builders. Now, one thing that I look for, this is starting to put in a bottoming pattern. I'm going to show you what I mean by that. So yeah, we broke the downtrend. Yeah, we did all that stuff. But if we draw a line across here, what that is a pattern which is a double bottom. And I think we're going to go higher in this double bottom. It's a smaller one. We're not used to like the big main ones that you see in energy and some of these other ones, but this to me looks like a double bottom, and we're going to go higher. Home builders, ETF, higher. I know, weird, right? If you take a longer term view on this, this is an ultra bullish formation. And I know everyone's bearish on home builders, but you know what? I don't listen to other people. I just do my own thing. I don't care what they say. The home builders right here look like a good entry point for a big move to the upside. A big move, like a decade-long move. If that is the case, that means that inflationary pressure from loans going into the system is there, and that the majority of people are sitting on the sidelines waiting for mortgage rates to go down. That's one of the top Google trend searches is mortgage rates, because people want to buy homes. They want to get into homes. And it's weird that we've got this nice double bottom pattern that's going, and then that we're about to probably break to the upside and move on higher. We could see a little bit of a pause here, because we do have a lot of trading, and we could pause somewhere in here or just above it. But this to me looks good, like a bottoming pattern where we could go higher. Looking at Moo, and you know, if you look at a lot of these patterns, we're seeing that same kind of double bottom type pattern in all these different charts. Moo's got it. Moo, the VanEck, we have the big breakout. This chart is more or less XHB. XHB is the same chart as Moo, if you notice. It's the same chart. And it's all dealing with interest rates, inflation, and interest rates into the system. And money flows go into these types of companies because of the housing market and the inflation in the system. Looking at copper, copper has a small down today. It's nothing too big. There wasn't much follow through here. I think this is ultra bullish for copper. I think we're going to see a move up in copper. We've broken the downtrend line, and I think eventually it'll grind its way higher. We're right at this long-term resistance line that we hit our head on here. Once we get on top of that, get up here, retest, and go, we could see a big move in copper. So all of the copper stocks are throwing really good chart patterns. There's a lot of high dividend paying diversified mining companies out there. A lot of opportunity, guys, a lot of opportunity. Lumber moving higher today. Again, we can see the descending wedge. We broke out. Now we're doing a retest. We're getting some more buying pressure. That's good. The home builders are also looking quite good. So when you look at this from kind of a holistic approach, I think that lumber is going to remain elevated. I don't know the exact pricing. I'm not playing lumber. I'm just saying it's going to be elevated, and it is elevated compared to history. You know, big long-term view here. Lumber still above like basically anywhere in history. And what happens is you break out, you do a retest, you do a back test, and then it breaks and goes up again. So all these people who just watch lumber, you got to do a little bit of technical analysis in here on the big picture view. I think we're going higher, just like the home builders are going to do. As weird as that is, that's what the charts suggest. It's not me; it's the charts suggesting that. Iron ore heading up 1.43% today, and we're getting a little bit of buying pressure here. I got to see what happens here, guys, because you can see that the opening and closing prices are contracting. And we got to see what this does here. We want to break up above this. We could be coming down where we turn and head lower in iron ore. Now, that's speculating because the opening and closing prices we're basically losing momentum here. And I don't want to see this turnover. I'd like to see the break higher. But what I like to see doesn't matter. I have to see it. We're still in the falling wedge, though. Aluminum getting a little bit, this was a raping here, guys. What the heck? Down 7.75%, getting hit, but we're still above the trend line, support resistance line. So it still looks all right. We're just getting a big selling pressure day. We'll see if this means something. Let's see if it has any follow through with it. Baltic Dry Index also in this falling wedge pattern, which is bullish for a move higher. Doesn't mean it's going to happen immediately. Newcastle Coal up 1%, and it is popping out right here. It's that little sideways down or sideways weak. So that's looking all right. Getting a little bit of buying pressure there. Ethereum is heading higher today. It's looking like we're trying to find a bottom. Same with Bitcoin. So that's what I've got for today, guys. Again, I remain bullish. I remain long in all my stuff. What is, I would say, the most positive things that I see in the market? Uranium trying to break out. That's a big deal. If we can break out here, we could see a big run. I do think it's highly correlated to the overall markets. I think you're going to see, if you're going to see uranium run, I think it's going to be correlated with the overall markets going higher. I think we're going to see weaker dollar, weaker yields. And I even think that Bitcoin and Ethereum and those types of things is a measurement of liquidity in the system. So if those go higher, I think there's loosening monetary conditions ahead of us. And that's when uranium really starts to shine. We don't see it in the increasing interest rate environment as much. We see it kind of at the top when things go steady or come back down. That's why it kind of took off in 06, 07. 05, 06, 07 was kind of the back half of the commodity bull market. And I do think that we could be entering, we'll say, the back half of the commodity bull market at some point in the near future, maybe 2023, 2024. We start heating up and start moving. So it does all align. It all tells us a big picture view of where we are in the commodity bull market. I think we're in the early to mid stages. Does that make sense? So we had a big, nice kind of early move, and now the thick of the commodity bull market's coming, I'll say. So we had the very early move. That's kind of behind us, the early move. We consolidated for a little while. Now we've got the thick of the move, the wave 3, so to speak, still ahead of us, I think. And that is kind of being verified by how interest rates are acting and how the dollar's acting. The dollar peaked in 2002, which is kind of the 2000 to 2002 move, was the early stage of the commodity bull market last time. I think that's where we're at. I think we're at the 02 where the dollar rolls over. Interest rates, they may pause, they may go up a little bit, but I think more or less they're going to go more sideways, kind of moving around. And then you're going to see the overall markets kind of come back with some new life. I think they could reach maybe their all-time highs again, put in a top, kind of a double top. They'll pull back, and that'll kind of be what it looks like going forward in commodities. So commodities, I think we're going to go higher here, I think. And again, nobody knows the future. That's why I say I think. Nobody knows with 100% certainty. But a lot of these, they've broken big, large bases. They've kind of had their early move. They've done the retest move. Now the big move's ready to come. We're seeing that in home builders. Home builders, I know, right? Home builders. I thought everyone's bearish on homes. What the heck? The charts say we should be bullish. As weird as that sounds, okay? It's not me, the charts. The charts are saying we should be bullish on home builders, which makes me think that interest rates are going to go down, which makes me think we have looser monetary conditions, which makes me think that these liquidity measurements of Ethereum and Bitcoin and these other things are probably going to go up. I know, it's weird. NASDAQ up, S&P 500 up, and then I think we're going to see all the commodities go up with it. So it's kind of an everything type rally, perhaps, maybe. But that's what I've got, guys. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And we'll catch you guys later. This is Finding Value.